Anybody that knows how to make more money with money, you're going to do great with credit. It's kind of like trading or investing in stocks. There's something called margin trading or leverage trading.
It's like if you have a vehicle but you have no gas to put in the car, is doing this the right way with guidance could potentially be enough to just get the vehicle moving. All right, we're live. All right, everyone. Today I am sitting with Colin. So we served briefly together when we both had started our journeys in the military, and he is amazing. He definitely started me, I think, when initially you had given me some assistance when it came to stocks, because I barely knew what the stock market was aside from what I learned in a dictionary. So I think that's where it started, and I know you're doing crazy things when it comes to credit, and a lot of people that are going to be watching are probably going to be related to real estate and how getting credit relies into that. But why don't you start with letting us all know who you are, where you came from, brief overview, and then what you're doing now to freaking not only change your life but others.
Yeah, man. Thanks for having me, brother. I'm from Brooklyn, New York. My name's Colin Dedelli. Listed in the Marine Corps, 18 years old, served 7 years, got out sergeant 2 years ago. Something I've always been obsessed with since a young age. They say your values come from your voids. The biggest void for me was being a broke kid in Brooklyn, New York, going to, rich school where I was the only poor kid. So my biggest value was money. So that's why, like I said, I picked up books like Rich Dad, Poor Dad, The Neatest Little Guide to Penny Stock Investing. I was 13 years old in the library reading books on REITs, Real Estate Investment Trust, just trying to find out how to make money, so I could fill that void. And I've been chasing it ever since. But I got out of the Marine Corps in 2020, and I wanted to pursue credit because credit was something that I loved. I taught it to a lot of my Marines. It had a big impact on them. And I saw credit as leverage, as an opportunity. Everyone knows that 92% of millionaires are created by real estate. And it's for the simple fact that real estate has more leverage than any other industry. Right. 20% down gets you 100% of the property, right? And so credit introduces a whole new dynamic that Americans need more than ever, because 60% of Americans have less than $1,000 saved. Everybody's living paycheck to paycheck. And we all know that it takes money to make money. So what if you could use other people's money? And that's what Robert Kiyosaki talks about, is using OPM. That's how the rich get richer. They don't use their own money. They use other people's money. They use leverage, because if you want an extraordinary income, you got to do extraordinary things, and you need leverage. That's the only way you're going to get to extraordinary. So that's why I love credit. And the reality is, we're so blessed and privileged to live in America. Every citizen here, if you have a SSN, you have a social security number, that means that you also have a 3-digit number that's assigned to you called your credit score, from 300 to 850. And basically it's your resume to the banks on whether or not they should lend money to you. And by gaining access to that money, you could take care of opportunities or take advantage of them that you would otherwise not be able to, because maybe you don't have the income or the funds, on the side in order to take advantage of that. And so a lot of people, like I said, they're living paycheck to paycheck. So what would it take them to get started in real estate or started in business? Maybe 10 grand, 50 grand, 75,000. That could take some people 5 to 10 years of grinding with their head down, saving in order to get that capital. But credit speeds up that whole process and gives you access to that money as soon as possible. So that's why it's such a great opportunity and why I love sharing it. But what I do now is I'm basically like a business coach, a credit consultant. I have various data points across the nation from many banks, and I show people how to quickly and effortlessly form an LLC and gain access to anywhere between $50,000 and $250,000 in low interest and oftentimes 0% interest business credit cards and lines of credit. And these people are typically entrepreneurs, real estate investors, or business owners, and they want that capital so they could take advantage of more deals or start a business or scale a business.
That's awesome, man. So you obviously, that sounds great. What do you say to someone who's like watching this, and let's say they're around 600, maybe even worse? Like, are they able to jump into this opportunity, or do you need to be at a certain point to even consider this as an option?
Dude, everybody should make an investment in their credit. Why? Because I think it's one of the best investments you make, because wherever you are in credit, for about $1,000, you can get to where you need to be, which is about a 680 score. That's typically what lenders are looking for. Everybody gets assigned a credit score once they're 18 years old. If you're an American citizen, if you have a social security number, you have a credit score. Everybody starts out at about a 680. Only you can screw it up and ruin your credit and drop your scores by getting charge-offs, late payments, etc. So by going through credit repair, I advise most people to fix their own credit, because there's a lot of companies that employ virtual assistants from the Philippines and use cheap softwares to repair your credit. And I also think I'm a huge believer in taking responsibility for the past and your mistakes and options, because if you fix your own credit like I had to do, you're gonna do that much more to keep it clean once you get there. Vice, a lot of people throw $1,000, get a service to fix it, and 2-3 months later, they need their credit fixed again because they didn't truly value it, because they didn't have to go clean up the mess themselves. It's kind of like hiring a maid to clean your house. You're just gonna go ahead and screw it up. Vice, if you clean it up yourself and it took you hours and hard work, you might be a little bit more conscious about keeping it clean in the future, you know? So if you're in the 600s, like I said, for $1,000, or just buy Credit Secrets ebook, it's $20. If you want to go ahead, get your hands dirty and take responsibility and fix the mistakes you made, that's the best investment you can make, because once you get to that 680 score, not only are you going to save, on average, they say somebody with a fair credit score of 600 versus somebody with a good credit score of 720, they save about $45,000 across their mortgage, their car, their loans, and their credit cards. So why not make an investment? If it's a little bit of time or $1,000 to fix your credit, it's an investment that's always going to pay off by savings and everything that every American needs: cars, cards, and houses, right?
For sure, man. So it sounds like step one is you got to have a right mindset. You know, people always try and avoid it, but if your head's not in the right space, it's gonna put you in a bad start. So that's awesome. No, I completely agree. Is people need to have, take responsibility. And I think you shared that book before when I have someone I was helping fix credit, and it's true. That book really just gives you A to Z, everything to fix it. And you're right, because we've definitely gone through companies, and there's a lot of bad ones out there for sure.
Yeah,
so
there's a lot
let's
of
use
low quality companies. Yeah, man.
Yeah, for sure. And then looking at, let's say use me for an example, right? Let's say, all right, so I'm interested. I want to do something with it. I know that if I can get capital, I already know where to find deals. Like, I want to get out there. I want to jump into it. What, let's say my credit score is about a 730 right now. So what do you think, what opportunity do you think is available for me in terms of credit if I was to jump in right now with no outstanding debt, got a 730, like ready to jump into this?
Yeah. So if you think about it, there's really two aspects to credit. There's consumer and there's commercial. There's consumer uses for it, like getting a personal car, getting a personal credit card, getting a personal loan, getting a personal home. So there's a consumer aspect of it, and most people are familiar with that. But where the real leverage and the real value, in my opinion, and this is where it changed everything for me, was once I understood the commercial side of credit. Because when you use your personal credit, we all know there's one of the major credit scoring factors is utilization. It's worth 30% of your score. It's utilizing your credit cards. And if you use your credit cards, if you max them out, it drops your score lower. Well, business credit cards, business loans, and business lines of credit, they don't show on your personal credit report. So with you having a 730 plus score, the minimum bank score that most banks are looking for is a 680. A 730 and above practically guarantees you an approval at any bank you go to. Well, again, if you wanted to invest in properties, if you wanted to use it for commercial use instead of consumer use, you could go ahead and get a personal card, a personal line of credit, but by using those, you're going to lower your credit scores.
Right.
By taking 10 minutes to go online and go on InkFile and establish something called an LLC, limited liability company, you can get business credit cards, business lines of credit in the company's name that aren't going to show on your personal report. And the other benefit to them is that business cards and lines of credit are often bigger than personal lines of credit and credit cards. So whereas you might be getting limits of 5 to 10,000 on the personal side, you can likely get 10,000 to 50,000 on the business side. So not only are you getting more funding, but you're also getting higher quality funding that's not going to show in your personal report or drop your score. And it also comes typically with 0% interest for 12 to 20 months. So obviously the credit card companies know if they offer people 0%, you're going to throw a huge amount of debt on that card, thinking that you have a year to not pay interest, which you do, but most people are not going to pay it off in time. Well, if you put it into a worthy investment, which is what I use it for, oftentimes you can get it paid back before the interest is due. And now you're really doing Robert Kiyosaki's vision. You're actually using OPM to make investments and build wealth just like the rich do. So what I would say is if you have a 730 plus score, if you have a 680 plus, make an LLC. It's free if you go on InkFile. Other websites and lawyers charge people thousands of dollars, but InkFile simplifies the process. You only have to pay the state fees. And the reason why you want to make an LLC is two major reasons. One, banks don't view sole proprietorships or individuals as businesses, so you're not going to get as much funding. And two, why not have an LLC? Because it limits your liability. It's in the name. So if anything goes wrong in your business, you're not personally liable. They can only sue the business and the business assets. So it kind of protects you in a way. And also you're just going to get a lot more funding as an LLC. So I would say, yeah, man, make an LLC and go ahead and start, getting approvals for business funding.
For sure. And obviously, like, you can look up anything nowadays on the internet. What if I'm like, man, that's, Colin, that sounds great. I would rather you walk me through the whole process, because I know you do some coaching as well, right?
Yeah. So yeah, you could look up pretty much anything on the internet, but there's value in mentorship. And that value is that you get to take the process of thousands of hours and lots of mistakes, and mistakes cost money. They cost time too. And you can minimize all of that and fast track your success with a proven system from somebody who's done it with over 500 people. I have about 600 clients now that I've walked through this process.
Awesome.
And so I've seen thousands of credit card applications. I know what lenders are the most generous. I know which lenders to stay away from. And I know the common mistakes and traps that people fall for. So what I do tell people is, yeah, you can find out a lot of this on YouTube, but what you're really paying for is speed and convenience. Because it's going to take you thousands of hours to figure out what I know, where you could just pay me a couple thousand, $2,000 to $3,000 to have it all solved for you, and to be told just in 3 to 4 hours exactly what lenders to go to and how to get 50K in approvals. The other option is there are funding companies. A lot of guys in the real estate world might be familiar with Fund and Grow. It's a company that they charge a 10% fee typically on the amount of funding they get you. So if they get you $55,000, they're going to charge you $5,500. So that's another option as well.
For sure. Yeah. So what are you having your clients really jump into after they get that credit nowadays? Obviously, we're all familiar with real estate, whether it's flipping, whether you want to jump into a BRRRR method where you're buying and then refinancing that money out to pay off the credit. What do you see a lot of your students taking that money once they have it? Because I'm assuming most people watching this are not going to know what they want to jump into once they even have the money in their hands.
Yeah, there's a lot of people who go through our training, they get access to funding. I'll give you an example. You got a guy from Georgia, his name's David. He's like 56 years old. He's living the rat race just like a lot of Americans, but he's late in his career, he has kids, and he wants to build generational wealth, and he doesn't have any clue where to invest it. So we have a few proven investment opportunities. Some of them are automated e-commerce stores. The way that they're automated is that they're just ran by some company that splits the profits with you 50-50. They do a wholesaling, so they'll buy things in bulk and then they'll sell them on marketplaces that don't require advertising, such as Amazon. Half the time, if you buy something on Amazon, you're buying it from a company like me who has some automated team running it for them. If you search the couch that you're buying, it's way cheaper, and it might even be at Sam's Club or Walmart, but you're buying it on Amazon for a lot more because most people don't price check when they buy stuff on Amazon. They just purchase it, right? Another good opportunity, what I tell people is anything that's going to ROI, anything that can outpace the minimum payment on the credit is going to be a good investment. But because this is risky, I do disagree with Dave Ramsey entirely on a lot of what he thinks. It's because early in the game of real estate, he got screwed himself. He was over leveraged. That's why he's so against it. But I do think real estate's one of the best places to put it. And what I like to do is affordable housing or Section 8. And the reason why I like to do it is because in my eyes, it's the lowest risk. It's guaranteed by the government, and there's massive demand. If you look at the waiting list for Houston and Dallas, there's a 5-year wait list for Section 8 housing in both of those areas. And they actually opened in 2018 for 1 day, and they met the requirement, and it's been closed for 4 years since. So it's guaranteed income from the government. So that's why I like it. And typically those properties cash flow on average about $600 per month. That means if I use $10,000 on a 0% credit card, to purchase a $50,000 little 2-bedroom house for a Section 8 person, and that gets me $600 in cash flow, that means in 16 months, I pay back that credit card. So now I have all the equity in the property, I own a cash flowing asset, and I can rinse and repeat and use that credit line again, or I can cash out, refi, and multiply my portfolio and get more assets underneath my LLC, you know?
Yeah, for sure. I think another, obviously look at Central Florida where I have a lot of ties. A lot of big thing there is lease options. So people will get single family starter homes, need some work, fix them up, refinance the money out, and then they're setting people up for a higher lease amount, but they're letting them have an option to purchase it at the end of that period. Because a lot of times, depending how much you need it, I mean, that lease option payment could help you put back that money towards the car too. So no, that's awesome. And I'm assuming you're probably doing that pretty often with Section 8. I've definitely heard other investors who jump into that as well.
Yeah, we do it in, I do it in Oklahoma. My uncle, he does it in Pennsylvania. He's the reason I got into this. He has 60 properties. They're all Section 8, and he loves it because there's a lot of misconceptions that you get low quality tenants and stuff like that. But the reality is, again, there's a 5-year wait list on average to get into Section 8. And you got to think from the mindset of the tenant. They're getting their rent paid for by the government, typically upwards of 90% of their rent.
Wow.
So why would they trash your house and mess it up and then lose their privileges of Section 8 for the rest of their life? Why would they do that? Most of them don't. And so it's guaranteed income. The check comes in the mail from the government every single month. And they're only paying the small portion of the rent, 10 to 20% often. These are old people, disabled people. And if you really screen these tenants, just like regular tenants too, right? They can be hell. They can be awful. I've seen horror stories of some of our, veteran brothers who are also into real estate, or I speak with higher enlisted, like sergeant majors, etc., who go through their career getting a lot of houses in various duty stations, then renting it out. And we've had people had to fly back home because the tenants were destroying their property. And these are military people, Yeah,
I've been there.
So there's tenants of all types, not just low income, that are awful. And it's up to you to screen them, do background checks, and just make sure that they're a good fit,
No, that's a solid point. I think the most exciting thing is the ability to raise that capital. I mean, I know I was definitely super intrigued before when we had talked, and it's only grown more, especially with inflation and stuff like that. It's because, the more you sit around, it's just going to pass you by. And also, tell people, it's same with Dave Ramsey, is like, you don't get taxed on debt.
Yeah.
So, as long as you have, like you said, the income paying it off, it seems like a solid thing. So for your coaching, is there a wait list for that? Like for anyone who's viewing, who's maybe even open to it or having that conversation?
I typically only take 5 people per month, and it is on a, I like to make sure we're a good fit. I like people who are motivated, people who like doing the work, because there are a lot of people who are just like, do everything for me. And what I really love about funding is that the reason why I do it in a coaching format rather than a done-for-you service is what a lot of people don't realize is the way you get the most amount of funding is actually by doing it yourself. A lot of these companies, such as FundWise, Fund and Grow, they're not getting people as much funding as people could get themselves for 2 major reasons. One major reason is that almost every single business checking account requires you to open the checking account in person. So these funding companies can't do that for you unless they're willing to get a power of attorney and walk to Chase and Bank of America and Wells Fargo and then open the checking account in your name with the power of attorney. And they're not willing to do that. And 2, by opening the business checking account, that's establishing a relationship with the bank, and that actually gets you a lot more funding. So a lot of people don't know, part of the greatest ways to get more funding is establishing relationships. And so a great example I could give you is I had a client, David, who had an 805 credit score, FICO score. He wanted to apply for Chase Bank. He wanted to get their business credit cards. They offer 2 0% business credit cards for 12 months. And he asked me, Colin, do I have to open the business checking account? And I said, you don't have to, but you should. And he said, why? And I'm like, well, that's a relationship and they'll approve you for a lot more. Well, he said, I have an 805 FICO score. I'm going to apply without opening the checking account. Well, they only approved him for $5,000. I have a 720 FICO score because I have loads of inquiries. I have about 23 credit cards. As long as it's above 700, I don't care. Well, I applied for 2 Chase cards and they gave me 20,000 each. They gave me 40 grand total, 0% for 12 months. And David was like, what the hell, man? Why did you get 40K with a lower credit score than me? For the simple reason that I opened the Chase business checking account and I put 5 grand in it. And the last reason was I had a personal Chase card, the Chase Sapphire card, and I had it for 3 years. Every credit card you have is a relationship. So people always ask me, Colin, when I'm applying for funding, what lenders should I get? Well, I look at your credit profile and the various credit cards you have. If you have an Amex card, a Chase card, a PNC card, you have relationships with those lenders. So not only are you more likely to get approved, but they're more likely to grant you a higher limit. So you want to establish relationships with lenders, and that's what these funding companies can't do. So what Fund and Grow and a lot of these companies actually do is they just apply to the 5 major banks in America, regardless of whether or not you have a checking account, a credit card, or a relationship with them. So they often only get you approved for $5K per card, and they'll get you 7 cards or so, which get you about 7 inquiries, and it drops your score. So that's why most people find themselves only getting approved for about $30,000 or $40,000 when they use a funding company, because they're missing that crucial step of just opening the checking account and establishing a relationship with the bank. And only you could do that yourself because you're you, and banks require you to go open it in person. So that's why I advise most people, if you're gonna do funding, do it yourself, establish relationships with banks, and exhaustive relationships you already have. If you have personal Navy Federal card, that's the bank you're gonna want to do for funding.
Makes sense. And what about, so obviously I have a S Corp already and have business banking with Chase. So obviously it's always good to open other companies, especially if you're gonna be doing like real estate and stuff like that. But do you have any clients that come through that already have like an entity set up and relationships to leverage that? Yeah.
But the problem is, some people, so I'll give you another example. We had a client in Pennsylvania. He had a company called David Properties LLC. Properties, capital, investments. People, these are very popular things to put in your LLC name. Everybody likes to be a big shot and put investments, capital. Well, the banks don't like that. The banks don't like sexy. The banks like boring businesses. Sexy businesses are risky. They don't like auto. They don't like sales. They don't like trucking. Over 10,000 trucking companies failed last year. So a lot of people join my program with all these high risk industries or a high risk name. So what I tell everybody, the best way to set up your LLC is to set up a broad, neutral LLC. So I would make it Cameron Hodge Enterprises or Cameron Hodge Ventures or Consulting, because all of those are very broad and it doesn't tell the banks exactly what you do. Now, here's another reason. A lot of people in business in the first few years, they switch up what they're doing. Initially, they're gonna start e-commerce, but then they end up becoming a real estate investor. So by getting a broad name, you can also switch later down the road. If you do switch your industry, it's not going to come into play. And what else you can do is you could buy what's called a DBA, a doing business as. So when I get a McDonald's franchise, my company's name could be Colin Matthew Enterprises LLC, but I'll purchase a DBA, doing business as McDonald's Inc., McDonald's Corporation. So you can save the sexy brand name like Cameron's Properties. You can get that in a DBA while still maintaining a neutral, boring business name so that the banks don't deny you. So a lot of people do join with risky names or risky industry, and then they have to make an LLC from scratch. And that kind of sucks because some banks do discriminate against you for being a new business. Some banks will say, hey, come back to us when you're 6 months in business. But I will tell you, I've personally gotten about 247,000 in approvals on a 2-week LLC. And I did that because what a lot of people don't realize, when you fill out these applications, you can make a brand new LLC today. And if you have a 680 plus FICO score, most banks will give you a business credit card, because business credit cards are what's called no doc. No doc means they're not gonna ask you for income verification. They're not gonna ask for tax return, financial statements. They're just gonna check your credit. And if it's clean, there's no major derogatories or major debt or high utilization over 50%. If your score is 680 plus, they're gonna approve you for a business credit card. Now, the big mistake a lot of people make is when they fill out these applications, they're like, shoot, I'm a new business. I'm Cameron Hodge Enterprises. I haven't made any money yet, so I'm gonna put a big fat 0 for revenue. But what people don't know is that revenue can be a projection up to 500K. So even when I make a brand new LLC, I always put 500K on the application because it's perfectly legal. You're allowed to project even if you haven't made a dime yet. Now, the other mistake people make is that they don't know income is often stated. 95% of the banks are not going to verify your income. So a lot of people just put 15,000, I'm on unemployment, $0, and then the bank denies you. Well, we typically put 100 to 200K. Anything above 250K is typically going to trigger a financial review, but putting 100K is solid, and you'll typically get a good limit approved between $5 grand and $25 grand.
That's awesome. So obviously, I'm sure it takes a specific type of person who's doing this. Who do you really? I know you mentioned it briefly before, but why don't you mention it one more time? Who are you specifically looking for that, like, yeah, this person will hit from start to finish? Because I imagine nothing's guaranteed and nothing's free. So I'm sure there's gonna be trials.
In regards to like the credit profile or the type of business owner, like
type of person.
Yeah. So anybody that wants more out of life, man. Anybody that's a hustler and looking to make more income. If you're a creative person, if you're diligent and you know how to adapt and overcome, and if I were to give you 50,000, if you can flip that and make a return on it, this is for you. So, somebody who knows how to take measured risk and make worthy investments, somebody that does their due diligence, anybody that knows how to make more money with money, you're going to do great with credit. It's kind of like trading or investing in stocks. There's something called margin trading or leverage trading. And if you're a bad trader and you gain access to leverage trading, you're going to be even worse trader, right? You have no business doing that. But if you're a good trader who's making solid profits and then you use leverage, obviously you have the potential to make even more money. So, and again, if somebody doesn't have a clue where to invest the money, what we typically do is there's a few different investment opportunities we dabble in. Automated e-commerce store is a good option. Well, we see a lot of people killing it with Airbnb. And they do rental arbitrage. So rental arbitrage is basically looking for properties that are for rent and then contacting them and doing a walkthrough and then letting them know, look, don't freak out, but I want to rent your property, but I want to use it for Airbnb. Now, I know you're probably thinking, oh, heck no, you're not turning my property into a hotel. They're going to trash it, etc. Well, Airbnb has $1 million insurance, and you're only asking for $1,500 a month rent, but I'm going to pay you $2,000 a month, and I'll sign a contract that I will cover all damages. So now you're going to get $2,000 a month, and you don't have to deal with the tenants anymore because I'm the property manager. I'm handling it. And a lot of property managers these days, they're actually migrating from managing rentals to managing short-term rentals, aka Airbnbs, because there's so much money in this business. Airbnbs in Florida are making 10 grand per month, whereas it would normally only make 1,700 being rented by any individual. You
even looked like Big Bear Lake, California. I talked to a manager out there. She quit her job as a lawyer, making $125K a year, and now she just manages short-term rentals. She's about medium-sized, has her whole team below her, and each property is doing about almost $20K a month, and that's just like a basic home.
Yep. If you do the rental arbitrage, basically all you have to do is pay the first month down, the deposit, and then you furnish the place. And you typically furnish the place with about 2 times the monthly rent. So if the monthly rent is $2K, you put about $4 grand, a couple mattresses here and there, a couch, a pool table, maybe.
A theme, make sure it looks nice,
Yeah, and that's pretty much it, man. So, and you don't have to manage it because, again, there's property managers for that. So it's a good business opportunity. And there's a few others. We do something called bridge loans. So a bridge loan is a good option for people.
Yeah, I'm familiar with it. Why don't you explain what a bridge loan is? Because I'm familiar with it, but I don't think everyone would be.
Yeah, so there's a lot of people who have really clean credit profiles, but they have low scores because they have high utilization. Maybe all your credit cards are maxed out.
Right.
So there's actually companies called bridge loan companies, and they will pay down all of your personal credit card debt temporarily just for 1 month. And the next month, your scores will update to 700. And then you will go ahead and get your business funding approvals. You'll get, 50,000 approved from 4 different banks, and then they'll re-put the debt back on your cards plus interest. And the interest rate's not sexy. It's typically 20%.
Of course.
But if the amount of debt you have is below 10K, it typically makes sense because you're only going to incur 2K. And if it opens the doors to 50 grand in business funding and you put that somewhere intelligently and it makes a great ROI like Airbnb, automated e-commerce, or a real estate property, it all makes sense. Now, for those who have a lot of debt, typically 10K and above, it's going to be too costly. And what I advise people to do is try to get a debt consolidation loan. So again, utilization is one of the most important factors. And a lot of people who join my program, the one thing holding them back is that they have too much credit card debt. So what we'll do is what I did a few years ago to get my first round of business funding. We'll take all of our credit card debt and pay it off with a personal loan. And the reason this works is because personal loans count towards your DTI, whereas credit card debt count towards your utilization. So if you're 100% maxed out on your credit cards, if you have a Discover card or an Amex card, a lot of people know that they actually offer loans up to 35 grand to all existing card members. Well, if you have 15K in credit card debt and your score is a 600 because of that debt, just by making this one change, just by getting a 15K personal loan from Discover and paying off all your cards, the very next month, your utilization will drop to 0%. It'll show a new personal loan of 15K on your personal credit report, which does not look bad. Adding a personal loan actually increases your credit mix, the different types of accounts you have, and it increases your score even further. So to give you the best example, about 4 years ago, I had 12 grand in credit card debt, 100% utilized. I got a personal loan from Navy Fed for 12K. I paid off the credit cards entirely. And the very next month, my score went from 580 back to 758 because I had no negatives. The only thing holding down my score was utilization. Gotcha. So by making a shift, by shifting your credit card debt to personal loan debt, you'll literally skyrocket your scores and you'll look good again in the eyes of the lenders. So that's a big shift a lot of people should consider making. And the other reason I would do it is people don't know, for every 10 grand in credit card debt, you pay $1,300 a year in interest. So if you have 20 grand in credit card debt, you're paying $2,600 a year in interest. So by shifting it to an 8% personal loan, you're saving about $1,000 a year as well. So not only are you skyrocketing your scores, not only are you making it easier to pay off your credit cards, because making 7 card payments is a lot harder than making 1 loan payment. So it's going to save you money. It's going to increase your scores. It's going to lower the odds and risk of you missing a payment and screwing up your credit forever. And it's just in your best interest to do so, really.
No, it makes sense. Again, I'll caveat with that is you better make sure you're living below your means, because you can get the personal loan, but if you're still swiping away, it's going to do nothing but hurt you in the long run. Man. But no, that's a solid plan. I mean, I think everything you've talked about, it's like if you have a vehicle but you have no gas to put in the car, is doing this the right way with guidance could potentially be enough to just get the vehicle moving. And I think a lot of us are kind of going through that, especially with how crazy things are getting expensive.
Yeah, it is. And you're 100% right. And because things are getting more expensive, there's even less opportunity available to people because, again, they don't have the funds to take advantage of the opportunities. And the opportunities are endless. The metaverse, NFTs, real estate, there's more passive income investing opportunities now than ever. And there's more knowledge and information available to everybody via YouTube and the internet. So everybody needs to get some type of side hustle. Everybody needs to get some type of side income to produce more than their ordinary income, because that's the only way you're going to get out of your job and get into a better place is by making money while you sleep. Just like Warren Buffett says, if you don't find a way to make money while you sleep, you're going to work to the day you die. That's it. It's
true. And I think everyone, there's a big culture with, not working a 9 to 5, but in reality, I think we all just want options. Like if you're got 10 to 100 doors, down the road of rental properties bringing in money, you're working at your job just because you kind of want to at that point. It's like, everyone's true. Like if you only have one income stream, are you really feeling comfortable? I've been there, and I can tell you I felt more comfortable when I have multiple forms coming in.
Yeah, and not only that, it's a big thing Robert Kiyosaki talks about in his book. You look at the cash flow quadrant, you have the employee, you business owner, self-employed, and investor. Everybody needs to make the shift to investor. And for the main reason that employees pay the most taxes, investors pay the least amount of taxes. It's in everybody's interest. I saw my taxes this year, and that's why I made the shift into real estate, because I realized, holy crap, Uncle Sam is going to take half of what I make unless I start getting some depreciation and some write-offs. And so as you begin to earn more money, you're literally just penalized for it, because earners of 400K or more are paying 62% taxes in states like California and New York. So you got to make that shift to being an investor. You got to work smarter, not harder. My dad, he's like a construction worker, highway repairman. He makes about 120K per year, but he's been working for 30 years and he's been working harder, not smarter, and his body has paid the toll for it. And that's one lesson I learned from him, is that I don't want that to be me. I want to be able to, throw a football with my son 15 years from now without having torn tendons in my arm. So everybody needs to make that shift and make their money work for them instead of against them,
No, man, I completely agree. It's just learning more. And I'll caveat with everything that we've talked about today. When it comes to taxes or anything legal, go talk to your CPA, go talk to your lawyer. But the whole point of this is sparking an idea, and that's all it takes. Edison didn't do any of his creations, or Nikola Tesla. They didn't create any of their creations. Henry Ford didn't build the Model T without at first there being a thought and an idea. So it's all about just getting that spark and then just taking it. Just let your curiosity run wild.
Yeah, it's faith, right? Faith is the ability to see things before they materialize. So
it's true. Well, Colin, this has been awesome information. I know I'm intrigued, and I probably will be doing a lot more, especially with like a whole mindset shift I've had in the last year. So how can people get a hold of you?
Yeah, check out my Facebook page. It's Colin Matthew. I believe it's facebook.com/official Colin Matthew.
Awesome, man. Well, it's awesome talking to you. And for anyone who has any questions, feel free to either send me a message here, for whether you're watching on Facebook, LinkedIn, send me a message, and I'm happy to connect you with Colin if you aren't able to get a hold of him already, or any topics we discussed. Reach out to me. I'm always happy to make that connection. I know I will be making that connection, probably pushing forward with some of the ideas we discussed today. So I hope everyone has a great day, and I will see you next week.